Hi, I'm Garth McKenzie from traderscorner.co.za. Here's your weekly look at the S&P 500, and I'm also going to take a look at the Nasdaq 100 index this week. So let's begin with a look at the daily chart of the S&P 500. What you can see up there is that this market for the very near term has been a little bit range bound, but overall it's in a rising channel. That has been the case since late March, and that rising channel is still very much intact. The price of the market right now is above all the main moving averages that we look at there. That's the 200-day moving average, the 50-day moving average, and then I also look at a 15-period exponential moving average. And right now the price is above all of those. There's some support down closer to 3,000, which is at the bottom of that channel. But overall, while that rising channel is intact, we've got to continue to give it the benefit of the doubt and look for potential for the market to still move higher. Other indicators that I'm looking at here are the RSI, which is holding above 50, and that's always a good indication of a rising trend. And then at the bottom, we've got the stochastic oscillator, which formed bullish reverse divergence last week, and that is also always a good sign for a strong upward trend. So overall, still looking pretty good here. If we move on to the hourly chart of the S&P 500, then you can see the short-term range that I referred to a little bit more clearly. That range is between 3080 and 3150. The market is stuck inside that range. At the time of recording now, it seems as if it's pushing up against the upper end of that range in the futures market. A break above 3150 would be bullish and would probably see the prior highs up at 3220 being revisited. On the other hand, a breakdown below 3080 would then point to a move down to 3000. For the time being, I think the bias is still to the upside here, so we'd probably place a greater likelihood on an upside break above 3150 and a move up towards 3220 in the week ahead. Then if we move on to the Nasdaq 100, we start with a look at the daily chart. And here again, you can see the market has been in a nice steady rising channel over the last 2 months or so. This market is stronger than the S&P 500. It has broken to new all-time highs, which the S&P 500 hasn't yet done. So the Nasdaq still is the place to be. The tech stock's still very strong overall. And what we're seeing here is the possibility of this Nasdaq continuing to move higher up towards the upper end of that channel on the daily chart. If we zoom in more closely onto the hourly chart of the Nasdaq 100 index, here you can see that there's some overhead resistance at 10,130 that this market is grappling with. And if the market can break above 10,130, then that would be a bullish break that would validate what seems to be a cup and handle pattern over there on that market. And it would point to further gains in the week ahead. So overall, time right now still suggests that these markets are strong. They've still got upward momentum on their side, and we've got to give them the benefit of the doubt. No matter what you might think around the fundamentals and lockdown and weak economic environment, we trade what we see. And right now what we see in these charts are markets that are still looking quite bullish. And while that is the case, I think one's got to take a bullish stance towards any trades on the S&P 500 or on the Nasdaq. That's all I've got for you this week. I'll be back again next week with some more market analysis.